Sorry, we had a technical difficulty there, so I'm just continuing on with question number 18. Not most students did not answer 560, but the answers were between 700 and the 560, even though the actual answer is 140. So we need to understand why that was happening. Most students who said 700 were looking for cash flow from operations and seeing that there was 700 in revenue in 2017. Totally true. However, this note expired in what year? So it became due in 17. So in 2017, you had the following information. So we had the note payable to begin with. We also want to make sure that we are always accruing our interest expense up until the date that it's due. So if we are looking at the year 16, the first year where we had 9 months were outstanding on that first year, we can look down and say 8,000 at 7% is 560 per year. How much interest did we actually incur in the first year? 420. So, interest payable, and then we'd have interest expense underneath owner's equity for the 420 for 16. This would be closed out to retained earnings, and we move into year 17. So in year 17, 3 months into the year, we actually had to pay back that note. So 3 months into the year, we paid back the note. So if we say that we had 560 was for the whole year of interest we owe, we already recorded 9 months at 420. We have the additional between these two is 140 in actual expense in 17. So my only interest expense in 17 is 140. So expense in 16 is 420. Expense in 17 is 140. So I would have accrued 140 in 17, 140 in 17. But I also made a payment on this. I actually paid back in cash the $8,000 for the note when it was due, the end of that third month in 17, say 4/1 probably. And I owed 560 in interest. So I also paid 560 in interest. So now the interest is 0, and this happened in 17 as well. So what did I pay for total amount? I paid $8,560 back on that. Again, the question is saying, what is the cash flow from operating? This is financing. This is operating activity. So when we look at, we have income of 700 in 17. And what did we have for an expense? These are cash payments. What is my total cash outflow for operating activities? 700 revenue minus the 560 cash expense, 140. So this one was I gave credit back to everybody for number 18 because it was a pretty difficult problem and so many people struggled on it. So everyone got credit for that, but I just want to make sure that everybody understood what was happening there. Additionally, go back to 17, this problem, I also gave credit back, but this problem was basically the first part of what you were doing for number 18. This asks what was the amount of net income for the 2017 income statement. And we basically already answered that because we accrued 140 in interest. So here was my expense for 17. And the problem told us that we had $700 in revenue in 17. So when you look at your income minus your expense, net income was 560. So when you're really putting all of this together, you're seeing that under accrual accounting, you could have different cash flows and different net incomes because of the accrual basis of accounting. Number 24, I gave back credit for this one as well. This one is a note again. So I noticed people were struggling with notes. But again, we have a situation that we borrowed a note on December. We borrowed a note. There was a note payable at December 31st, 2016 of $5,000. So if you're just looking at your transactions, you have $5,000 just sitting there as a note payable. It's a 2-year note, 9%. The money was borrowed September 1st, 2015. Principal and interest will be repaid at maturity. How much interest expense should we recognize in the second year? A lot of students said, oh, well, I'm just going to take my $5,000 at 0.09 and say $450 I owe for the whole year, for all of year 2. But that is not the case. How many months did they actually